Hi viewers, I've had several people ask me to do a video on capital gains tax on silver and gold here in the UK. So here we are, and hopefully in this video I'll manage to clear up some misconceptions about it. Now, many years ago my accountant, who also happened to be one of my clients, I was telling him that I was stacking silver and gold, and actually he had quite a few Morgan and Peace dollars himself. So I had a basic understanding from him about it, regarding it. And now on the table before you I've divided two piles. To the right is what's technically capital gains tax free, and to the left it is not. Now I'll explain why I said technically right now, because I'm going to read to you from the government's own website. It says you only have to pay capital gains tax over your free allowance, which is called your annual exempt amount. So each person in the UK has an amount that they are allowed to profit from without having to pay tax. And it goes on to say that the capital gains tax-free allowance is £6,000 or £3,000 for trusts. Now basically, as my accountant explained, it is really aimed at people with shares and bonds and those kinds of investments. You know, if they're making a huge profit each year and they're going over the 6,000, then they've got to pay the capital gains tax on any amount over that. So basically what I'm trying to explain is, for example, if I paid £30 for this Ukrainian Archangel and I sold it for £40, there would be a gain of £10. Now the basic rate tax, I believe, capital gains tax is either 10 or 18%. I'm not sure what the difference is, but from what I remember talking about it with my accountant, he said it was 10%. So if we go on the basis of 10%, so if I made £10 profit on this Archangel, I would have to pay £1 tax. But like I explained earlier, that tax is only due if you make over £6,000 in any 1 year. So taking another a little bit from Chard's website, it says on there, the best and most simple way to save from paying capital gains tax in the UK is by selling smaller quantities. As long as you sell your silver or gold, well, it says gold on their website, but I'm including silver, to make a profit that is less than the allowance set for that financial year, you will avoid having to pay any capital gains tax. So the bottom line is, you could make a profit on your silver and gold up to £6,000 in any 1 year before having to pay capital gains tax. And it further goes on to say many investors in gold or silver bullion need not worry themselves about capital gains tax due to the size and value of their investment. However, if you are planning to invest a substantial amount in gold, then investing in gold sovereigns or gold Britannias. Oh, let's have a look at the sovereign as well. Might as well, haven't we? Then you're better off investing in those, as they will be the optimum choice for you, because they are obviously capital gains tax free, which allows you the freedom to invest and sell as much or as little as you require, as and when you need. So there you go, that's the basic bottom line of it. Everyone kind of panics. Oh, if I buy coins from China or Russia, or Somali elephants, or American gold, I'll have to pay capital gains tax. The bottom line is no, you won't, because you'd have to sell an awful lot of it to make that 6,000 allowance, or to exceed the £6,000 allowance. So everyone kind of panics over nothing really, and you know, at the end of the day, a lot of the precious metals I've got don't even have a paper trail, so I just don't know. Well, I do know what I paid for them roughly, but you know, there is no you know, unlike stocks or shares which have that paper trail showing how much you've bought them for, sold them for, or the same could be for silver and gold shares, you know, certificates or whatever. You know, that is actually a paper trail of what you've bought, what you've sold, how much capital gain you've made. Whereas with the physical metals, there's really no determining, you know, what you've made. I have no idea what I paid for this Ukrainian Archangel. I know I got it from Hi-Ho Silver, but I can't remember what I paid for it. So anyway, so the point of me dividing these two into capital gains tax free and subject to capital gains tax is kind of pointless for the majority of us. You know, if you're buying kilos of gold, or I don't know, 500-ounce bars of silver, then yes, and then you're liquidating them, then yes, it possibly could be an issue for you and make you subject to capital gains tax. But you know, in reality, you know, you've got to make an awful lot of profit to get to that annual £6,000, and I'm presuming that you could probably, because I think it does go on to say about you may also be able to reduce your tax bill by claiming reliefs. So there may be a way that you can split that with your partner, so your partner could have sold some and you could have sold some, I don't know. But you know, it's something for you to look into if you think you're going to make £6,000 profit, or capital gain should I say, in a year on non-British coinage, which, like I said, is not going to affect the majority of us. And anyway, the last thing I'd like to cover is someone asked me in a previous video if I could do a comparison between a gold Krugerrand and the new Charlie Sovereign, because I wanted to see if the colour was noticeably different. Now, unfortunately, I've got a very overcast day here in the UK, and there doesn't look a lot of difference on the camera, but to my eye, the Krugerrand definitely looks more gold than the Sovereign. Yeah, because obviously they both got they're both 22 carat. But if I compare it to an older Sovereign, I would say it's more like the older Sovereigns colour wise. So I can't remember who asked that, but there you go, there's the comparison. To the naked eye it looks different, but not on the camera. If you've got any questions to ask, drop them down in the comments, and in the meantime, keep calm and keep stacking. Thanks for watching. Bye.